Wealth isn't built when markets are calm, it's built when others are panicking. Warren Buffett once said, "The bigger the crash, the bigger the opportunities, especially if you can stay greedy when others are fearful." Right now, fear is rising fast. With Trump doubling down on tariffs, global markets are jittery, headlines are chaotic, and most investors are heading for the exits. But smart money? It's quietly positioning for what could be one of the most significant wealth transfers in modern financial history. Every time tariffs rise, certain sectors take a hit, while others go vertical. In 2025, this isn't just another trade war. We're witnessing a structural reshaping of global supply chains, domestic production, and disruptive innovations in AI, energy, and blockchain infrastructure. The next generation of investment success stories won't come from playing it safe. They'll come from identifying where disruption creates asymmetric upside. In this video, I'll walk you through exactly where that upside is hiding, the sectors that are quietly heating up, and the specific stocks that could turn today's market volatility into tomorrow's generational wealth. If you're serious about investing through disruption, please hit the like button, subscribe for more in-depth insights, and help us reach 500 likes. However, please note that this video does not constitute financial advice and is intended for informational and educational purposes only. Always conduct your own research or consult a licensed financial advisor before making any investment decisions. Let's get started. Our first pick is MP Materials Corp., ticker MP. The U.S. rare earths ace in a geopolitical game of chess. Few companies reflect the complexity of today's trade tensions and the strategic urgency behind U.S. supply chain independence, quite like MP Materials. As the largest rare earth producer in the Western Hemisphere, MP sits at the heart of a high-stakes global power play involving tariffs, tech dominance, and national security. Headquartered in Las Vegas and operating the Mountain Pass mine in California, MP is one of the few American companies producing neodymium and praseodymium, two rare earth elements essential for a wide range of applications, including smartphones, electric vehicle motors, precision-guided missiles, and F-35 fighter jets. While the broader market recoiled amid geopolitical shockwaves, MP stock quietly surged up over 40% in the past month, outpacing both the S&P 500 and the U.S. metals and mining sector. A major catalyst? Bloomberg recently reported that the U.S. Department of Defense may inject additional capital into rare earth supply chains, potentially accelerating its mine-to-magnet strategy, which aims to end reliance on Chinese refining by 2027. And that matters. China still controls 85% of global refining capacity, and history shows that they're not afraid to weaponize this advantage, as evidenced by slashing exports in 2011, threatening restrictions in 2019, and recently slowing deliveries of EV critical materials amid escalating trade tensions. In mid-April, MP took a bold step by halting all concentrated shipments to China, citing national interest concerns. This move may create near-term pressure, but in the long term, it aligns perfectly with the rising U.S. policy support for domestic sourcing. Meanwhile, MP is making global plays too. The company just inked a deal with Saudi Arabian mining company to build an integrated rare earth supply chain in Saudi Arabia, broadening its footprint and potentially opening up lucrative new revenue streams in the Middle East and beyond. The recent price of this stock as of the time of making this video is $37.58, while a strategic buy zone is around $26.69. Watch for healthy pullbacks. The 12-month return, including dividends, outperformed both the S&P 500 and the U.S. metals and mining industry. MP isn't just a rare earth miner, it's a front-row ticket to the multi-decade reshuffling of global tech and defense supply chains. With tailwinds from U.S. policy, strategic alliances abroad, and tightening control over critical materials, MP Materials is well-positioned to benefit from fear-driven disruption, exactly the setup savvy investors look for during uncertain times. Geopolitical tensions, especially in volatile regions like the Middle East, tend to elevate defense spending and highlight vulnerabilities in global supply chains as Israel and Iran clash. When geopolitical tension rises, investors often rotate into defense, infrastructure, and materials stocks that are likely to benefit from increased government spending and supply chain reshoring. MP fits squarely in that category. What is your take on this stock? Do you consider it for a long-term or short-term gain? I'll be in the comment section waiting. From crypto miner to AI infrastructure juggernaut, Applied Digital is pivoting hard and investors are noticing. 145% stock growth in a single month. That kind of move doesn't happen without serious momentum, and Applied Digital APLD has been firing on all cylinders. Initially known for its roots in blockchain and cryptocurrency mining, Applied Digital has rebranded and rebuilt itself into a key player in AI-focused, high-performance data centers. Its transformation is being validated in real time by a series of headline-making deals and partnerships. Two massive lease agreements with AI hyperscaler CoreWeave are at the heart of this narrative shift. These 15-year deals are projected to generate $7 billion in revenue, locking in long-term cash flow and positioning Applied Digital at the core of the infrastructure behind generative AI's explosive growth. The company also launched a $200 million follow-on equity offering, which will fuel further expansion. And just recently, a strategic collaboration with ABB was announced to boost energy efficiency and performance at its AI Factory data center campuses in North Dakota. The result? Applied Digital's stock surged more than 140% over the last month and has returned over 13,000% in total over the past 5 years. A staggering figure, even by tech growth standards. A sharp turn brings sharp contrasts. But with a significant opportunity comes complexity. Despite securing $7 in contracts, CoreWeave sold its entire equity stake in Applied Digital, triggering an 8.6% drop in APLD shares. While the long-term contracts remain intact, the exit raises questions about capital allocation strategies, potential dilution from warrants, and the evolving power dynamic between hyperscalers and their infrastructure partners. Analysts remain bullish. APLD trades at $10, well above the consensus target of $9.94. Revenue is forecast to grow at an annual rate of 38.4% over the next 3 years. However, concerns linger: negative EPS and free cash flow, a short cash runway risking further dilution, execution risk as it transitions into a complete AI infrastructure and REIT strategy. However, looking at the bigger picture, it is well positioned as an AI, energy, and next-gen compute stock. Applied Digital is building what CEO Wes Cummins calls AI factories. Next-generation data centers optimized for GPU-dense workloads, AI, ML training, and blockchain compute. Their Polaris Forge region in North Dakota, spanning 4 campuses, is powered by renewable energy and engineered for low-cost scalability. In a world where data is oil and AI is the engine, Applied Digital aims to be the refinery. Partnerships with deep-pocketed players, such as Macquarie Asset Management, reportedly planning a $5 billion investment, only strengthen that thesis. Applied Digital is a high-growth, high-risk play on the future of AI infrastructure. The long-term vision is compelling. Own the data center backbone for the AI age. But execution, capital structure, and sentiment risk remain very real. For investors who believe the AI boom is just getting started and are comfortable riding the volatility, APLD offers asymmetric upside with the right catalysts. Moving to the following stock, which has huge potential, the Amazon of finance, SoFi is aiming to build more than a bank. It's building the future of money. Despite a 10% dip in the past month, SoFi Technologies remains one of the most talked-about names in Fintech, and not without reason. From digital banking and student lending to investing in B2B infrastructure, SoFi is building a full-stack financial platform, and its long-term vision is as bold as it gets. In Q1 2025 alone, SoFi posted $764 million in revenue, up 24.4% year-over-year, beating expectations by a wide margin. EPS came in at $0.05, a 150% year-over-year jump and 25% above estimates. The company has now beaten revenue targets in 4 straight quarters and EPS estimates in 3 of the last 4. Yet, the market hasn't fully rewarded these results. Share price is down 10.2% this month, mainly due to broader market volatility, interest rate uncertainty, and trade tension spillovers, not company-specific issues. SoFi isn't just launching products, it's building an ecosystem. Its land and expand strategy means customers come in through one service, say a student loan, and then adopt more products over time: personal loans, credit cards, checking accounts, investing, and even mortgages. That creates higher lifetime value, greater user stickiness. Powerful network effects. The payoff? SoFi's projected EPS is expected to grow 80 to 87% in the financial year 2025, outpacing revenue growth of 24 to 27%. That's operating leverage in action. Here are the catalysts. Fueling the Future Growth Smart Start Refinance program locks in student loan rates for borrowers before full-time employment. Student loan origination jumped 59% year-over-year in Q1, a timely weapon amid tightening federal forgiveness rules. Private markets for accredited investors opens doors to wealthier clients with higher margin needs, reduces dependence on traditional interest income, B2B embedded finance. Think of it as AWS for Fintech. SoFi's white label infrastructure enables other brands to offer banking and lending services, scalable, sticky, quietly disruptive. AI and data-powered insights. SoFi leverages proprietary AI models to personalize product recommendations and automate risk assessment, improving margins and cross-selling efficiency at scale. Why the dip? Why now might be a gift? SoFi currently trades at $13.27. It's just shy of the $13.82 consensus target. It's also rated F in valuation by Zacks, not because it's failing, but because it's trading at a premium to its traditional finance peers. But here's the truth. SoFi isn't a bank in the old sense. It's a tech-first mobile-native platform targeting Gen Z and millennials, the largest consumer demographic in the U.S. With a 3-year total return of plus 153.5% and a 1-year performance of plus 121.5%, SoFi has already demonstrated its ability to outperform when sentiment aligns with fundamentals. However, here are some risks and red flags to note. Valuation risk. The premium multiple makes it vulnerable to sell-offs in risk-off environments. Regulatory overhang, particularly in student lending and consumer protection. Execution risk. Rapid scaling without tight operational control could squeeze margins. Short-term sentiment. Negative revisions and macro headwinds may limit upside in the short term. The bottom line remains that SoFi Technologies isn't just riding the fintech wave, it's helping shape it. With a fast-growing ecosystem, expanding revenue channels, and strategic positioning in both consumer and B2B markets, SoFi is a long-term compounder disguised as a high-growth stock. If you're a momentum trader, watch for technical support. But for long-term investors with a 2 to 3 year horizon, this recent weakness could be an opportunity to accumulate a company still in its early innings of growth. SoFi is building the future of finance, one product, one customer, one ecosystem at a time. In a world of rising tariffs, geopolitical tension, and shifting global supply chains, opportunity often hides in plain sight. You have to know where to look. MP Materials, MP, is quietly becoming a national asset as rare earths shift from obscure metals to strategic imperatives. Applied Digital, APLD, is redefining what infrastructure means in the age of AI, building tomorrow's compute backbone today. SoFi Technologies is positioning itself as the digital gateway to modern finance, scaling rapidly, diversifying smartly, and targeting the next-generation consumer. These aren't just stocks. They're strategic plays on disruption, innovation, and resilience. If you're serious about staying ahead of the market, not just riding waves but spotting where the tide is turning, don't stop here. Hit that like button, subscribe for more insightful investment breakdowns, and drop a comment. Which of these stocks do you believe has the highest upside in 2025? Let's build more innovative portfolios, one insight at a time.